Hey, what's up, everybody? Thursday, March 11th. New record high. New York, baby. New record high in the Dow. NASDAQ climbing back. Hey, last week, remember, I made the video. I told all of you, Dow made a new high last week. I said NASDAQ is going to bounce back. If you saw my report on Monday, MMT Trader, that was the headline. You know, more fiscal stimulus coming. NASDAQ's going to bounce back from that correction, which was a great correction, by the way. I was buying. Remember, I said my only regret was I didn't have more capital to deploy. There were comments on this channel like a week ago, 10 days ago, people saying, I sold out. I sold out at the top, you know, pat on the back, yeah, such a hero. Now what? Where are you now? What was so great about that? Where did that leave you? You cannot, I mean you can, but selling in a bull market is just the height of folly. Mike, how do you know it's a bull market? Well, first of all, I've been telling you this. Second of all, you gotta look at basic economic conditions. Fiscal stimulus is unprecedented right now. Now, a lot of you might have some ideological opposition to fiscal stimulus. You're calling socialism, socialism. Look, I've been all over that. Every society has an overarching political system. The citizenry has to get the government's money to pay its taxes. That's the only way taxes can be settled. The government responds to the demands of the electorate mostly. I wouldn't say it's definitely not equally distributed. On that note, we find out today from a Fed release that the fourth quarter saw a 6.9 trillion increase in household net worth. Socialism, now a lot of that, a good portion of that went to the top income strata. But along with that, we saw from the second quarter to the fourth quarter, almost a 3 trillion increase in output. All right, so economic output increased by about 3 trillion. It would have went up more. Well, you know, maybe somebody would say, hey, 6.9 trillion of increase in wealth, but only, 3 trillion increase in output. Well, what happened? It went to savings. Yeah, you couldn't have output at its maximum or near its maximum level because the economy was shut down. Now we're starting to see the economy open back up. I mean, here in New York, starting next week, restaurants can go to 50% capacity. We saw Texas now, 100% open. Florida's 100% open. It's happening. More people actually, if you check online for appointment availability for the vaccines, it's everywhere now. It was very, very hard to get an appointment. I had a really hard time getting an appointment for my vaccine on March 24th. Now, the spots have opened up. So everything is starting to open back up again. Now, I don't know how to kind of impress this upon you any more than I've already tried. But I mean, when you're talking about stuff like, hey, I sold at the top. I mean, that is just, you don't understand. That is like, when you say something like that in the midst of the current conditions that we have, with this massive fiscal stimulus, with the economy just starting to open back up again. I mean, you're really exposing the unsophistication, the lack of sophistication of what you're doing. You're really exposing that you're kind of an amateur, that you are basing everything on price. I've said so many times that price is arbitrary. Like, you cannot allow price to affect your decisions because price can be all over the place. People ask me sometimes, when the market's going down, how far do you think it's going to go down? You could put a number on it. I mean, it doesn't change my behavior. Because like when I see value, I react to that. When I see overvaluation, or let's put it this way, when I see conditions no longer supportive of expansion or growth, that would be a scenario where I would move to the sidelines or maybe try to get short. And how many times have I said that conditions don't change like from week to week or month to month or even year to year? Like if the policies are in place to sustain those conditions, then you just got to sit there and ride it. Like you can't just arbitrarily pull the trigger and say, okay, I'm selling right now. Well, why? Because it ran up sharply and then, you're going to get a little bit of a breather. That's not a reason. That is not a reason. So you sold out. Wow, you're a hero. Now what? Where are you now? Sitting on the sidelines as the thing goes even higher. Yeah, I know, like they're gonna post comments now. No, I got out and then I turned around and got back in, and then I'm gonna get out again, and then when it goes down, I'm gonna turn around and get back. Come on. Please, spare me. I've been doing this for over 40 years. I've been a floor trader on 4 different exchanges and a member. You're not gonna be able to do that. You cannot do that. Nobody can do that. I mean, you're just fooling yourself. I mean, selling because the price ran up in a bull market where conditions are unprecedented in the support of the economy and the market. I mean, it's just the height of folly, as I said before. It just exposes your level of amateurism. Now, having said that, I could understand, like a lot of people, they get that short-term rush, the endorphin rush. Hey, I sold out at the top and then it came back down. But don't you see, this reinforces that bad behavior. You're going to do it the next time and the next time and the next time. And then you're going to sit there with crumbs as opposed to, capturing that big move. This is a gift. I mean, it doesn't come along all the time. Now, unfortunately, it came along as a result of a terrible, terrible thing. This pandemic, where over 500,000 people died and lots of people got really sick. 500,000 just in the United States. I don't know what the global amount is. I think we got over 2 million something. Terrible. It's a shame that it had to come as a result of that. I mean, I think one thing that has become clear, at least to some people, is that the government has the wherewithal, the financial capability to spend and make the investments that are necessary to sustain. If you studied any kind of economics, there's this fallacy about the business cycle, right? That there's some kind of built-in business cycle that goes up and down and up and down, and it's automatic and you can't do anything about it. I mean, we have just shown how nonsensical that whole thing is. The proper amount of fiscal support can keep the economy growing as long as we have the real assets to supply that growth. By real assets, I've talked about this. You got to have the labor, you got to have the natural resources. All right? So, I just think back. I think back at how many times people said, I sold out. And that is just, I just listened to that and look, man, I've been in this business a long time. I've been doing this a long time. Those were the exact mistakes that I made early on in my career. Exactly. It took me a long time. And it takes a fair degree of self-control. It takes a lot of self-control. And it's not fun when you get a drawdown and it pulls back. That's not fun. I'm not going to sit here and say that's great. But like I've said so many times, that's how you train yourself. I don't like when people say, hey, you got to be disciplined. Tell me, how do I do that? This is exactly how you do it. You welcome those periods. It might not be comfortable, all right? But that's okay if it's not comfortable. You want to feel that discomfort. That's where the growth comes from. Personal growth, financial growth, emotional growth. That's where it comes from. Anyway, don't forget to check out my podcast. The link is in the description below. And don't forget to go to my website, Pitbull Economics, and sign up for a 30-day free trial of MMT Trader. Remember, I'm the only guy out there who has an applied approach to MMT. No other MMT person is talking about stuff like this. No other MMT person is using the concepts of MMT and applying them towards investing. And they're certainly not teaching you about mental game. See everybody tomorrow. Bye.